Hey, what's going on, everyone? Good morning and happy day. This is Taylor checking in, and I've got to go shovel some snow after this, so I shall do my best to keep it short and sweet. I think we got a good maybe 4 or 5 inches, just enough to be just enough to make for a mess. But all right, y'all. Good morning. Hope you had a good weekend. We'll go on ahead and jump in here. Let me fire up the drawing tool first. All right, Camtasia. Record the screen. Do. All right, 3, 2, 1. We are in action. So here's pretty much how I'm seeing things, guys. Bigger time frames say buy the dip. So the monthly chart, the weekly chart, a lot of daily charts. The lower time frames say not so fast. Not just yet. So a good example, I think, is Google. All right, Google's got this beautiful weekly squeeze. It's a perfect 10 out of 10. It's beautiful. The issue is you go down to an hourly time frame, there's a sell signal. And the hourly grades out as a -8. If we go down to a 30-minute time frame, there's a sell signal. If we go to a 15-minute time frame, not the greatest. So there's the issue. We have really good setups on bigger time frames. But if you work your way from the ground up, 5-minute, 15-minute, 30-minute, hourly, the structure and the signals leave a little bit to be desired. If they can clean up the 15, clean up the 30-minute, clean up the hourly, if they can get the alignment from those lower time frames, then they can take advantage of a big monthly squeeze or a big weekly squeeze. So on the board here, the trusty board, you can see that reflected in the scores. So we got the indices here. The monthly charts are very good. SPX, QQQ, and the Dow, perfect 10 out of 10. The weekly charts are really good. SPX gets 10 points. QQQ gets 10 points. The Dow and the RSP get 10 points. Daily charts look good. Even with that little bit of a pullback you had last week, S&Ps are a 7, QQQ is a 3. And then look at the Dow here. Who is the Dow Jones trying to impress? 10 on the monthly, the weekly, and the daily. But point being, those are all really good scores. So first things first, in a market where the monthly, the weekly, and the daily are cranking out really good scores, I don't think I want to be focused too much on the short side. If the monthly chart was a -7, the weekly is a -5, the daily is a -5, then I'm not thinking about getting long. So in the face of those scores, or again, those bigger time frames say try to buy the dip. The momentum, the structure, the trend of the charts says a path of least resistance could be to the upside. The bulls can't do anything with that good-looking weekly or the monthly or the daily until they clean up these issues. So there's the big 3 score for the 1 hour and the 15-minute time frame. SPX has a beautiful monthly chart. It's got a beautiful weekly chart. It's got a great-looking daily chart. The 15 minutes a -10. The hourly is a -4. So from here, guys, we look for one of two things. One, potentially the issues on your 15-minute, the problems on the hourly, they could begin to work their way up to the bigger time frames. So now the scores in the 4-hour time frame, they shift negative. No bueno for the bulls. Problems on the 4-hour could work their way up here to the daily chart. The other option is they clean up the 15-minute. Everything goes positive. They clean up the hourly. Everything goes positive. And from there, in the context of a good monthly, a good weekly, a good daily, we're boogieing back to the upside. So the whole focus for me today, with all that being said, hourly and 30-minute squeezes. For the sake of the bulls, best case scenario, they all fire to the upside. They're not going to be perfect. They're not going to have buy signals if they fire to the upside. But if anything, it's a step in the right direction. So we'll check a few of those out. But you've got one on all the indices. S&Ps, QQQ, the small caps, the Dow, and the RSP. So SPX. Now going into today, the odds are kind of stacked against the bulls here. Price is under the 200. It's under the 21. It's under the 50. We've got a -8. We've got a sell signal. There's a better chance that squeeze breaks short. And like I just showed you, if the squeeze breaks short here, then the problems on your hourly chart could work their way up to a bigger time frame. So for the bulls, best case scenario, they try to slingshot this higher. And then they can work on trying to rebuild the hourly. Sorry, that's Google, not SPX. Same rules apply to Google. SPX is actually a little bit worse. The hourly squeeze is an A+ setup for a short. Break short, we could have bigger problems. Fires to the upside, they could start cleaning things up a bit. So you got one on the S&Ps. You've got one here on the QQQ, right, and not looking pretty. Perfect setup for a short. The IWM, not the prettiest. And the Dow, not the prettiest as well. So I think for today, that's pretty much all you need. If you're a bit more bearish on the market, then ideally you see the squeezes break short. If you're a bit more bullish on the market, you're waiting to buy the dip, you're waiting to buy the pullback. Best case scenario, they all fire to the upside. So that is how I'm seeing the market. And then keep in mind, not my favorite thing, but we do have earnings coming up. And I think the bank stocks are going to kick things off here pretty soon. So that does add a bit of a dynamic where, like right now, we got a lot of nice weekly squeezes. I like the weekly squeeze in Google. There's one in Tesla. We're long NVIDIA's weekly squeeze. There's SMCI. A lot of good-looking weekly squeezes. All of them have earnings in about, 4 to 8 weeks. So my advice there, the reality of it is, any pain that you might experience holding through earnings. So, for example, you got some calls on Google. You hold your calls to the earnings announcement. Google gets, whacked. Google gaps down 10, 15, 20%. Whatever pain you experience from that trade, self-inflicted pain. Google didn't hurt you. You hurt yourself. And a lot of times that's just a position sizing thing. So without a doubt, if I've got 10, 15, 20% of my account in Google calls before earnings, and Google gets dumped, that's going to hurt. That's going to hurt pretty bad. Might leave a little bit of a mark. If I have 1, 2, maybe 3% of my account in those Google calls before earnings, I'm not jumping for joy if Google gaps down, but it's going to be a little bit less painful. So my whole thinking here as far as the squeezes and earnings, focus on the setup. If you got the squeeze, you got your alignment, you got good momentum, you got your signals, take the trade. Have the willingness to hold through earnings, but be very mindful of your position sizing. 5, 10, 15, that can get very painful. 1, 2, or 3%, it might sting a little bit, but you're not out of business. You never want earnings to take you out of business. Been there, done that. So I continue to like Google a whole lot here. And then jumping over to Tesla, who admittedly was a little bit sloppy last week. So Tesla's not in my best graces right now. But the weekly squeeze still holds up really well here. 6 out of 10. It's an A+ setup. And remember, if they can actually get that squeeze going to the upside, if they can eventually push Tesla towards that 300 to 305, not only are they firing the weekly squeeze, at that point, they're going to be waking up the big old monthly squeeze. And that's where I think the party really gets going. But in the short term, we've got that earnings announcement coming up on the 24th. So do with that what you do with that what you may. But again, be very mindful of position sizing. I've had a few earnings trades where going into the announcement, like everything is perfect. There's squeezes, there's buy signals, good momentum, good structure. Like going into the announcement, it's just the perfect setup. And then it gaps down. All right, all that good structure, all those good signals, they can kind of get thrown out the window during earnings. So be mindful of that. But I do like Tesla. And then the one I want to watch today. And now here's the whole thing. Before I can add to a position, before I can get long anything else, I've got to get lower time frame buy signals in the S&Ps and the Qs. So before I can buy more NVIDIA, and I'd like to buy more NVIDIA, SPX, QQQ, they got to show me the trigger first. 30-minute buy signal, hourly buy signal. Now I can take some action. But I got to get the green light from the indices. So if we do get it, I think NVIDIA might be the one that I add to next. Now, one benefit of NVIDIA here, typically announces earnings a little bit later. So your Googles, your Teslas, they're kind of coming up here the next 3, 4, 5 weeks or so. NVIDIA gives you a little bit more time. You can play that into February without having to worry about the earnings. So that, I think, is a bonus point. But the major thing here for NVIDIA is the nested squeeze. We've been trapped in a big weekly squeeze since October. It's a whole lot of compression. And then on the 2-day time frame, we got a 2-day squeeze setting up. We've got a daily squeeze setting up with a slingshot signal. No 4-hour squeeze, but it looks pretty good. And then let me check the hourly. No hourly squeeze here either. So going into earnings, the question is pretty much, can they fire the big nested squeeze? If the daily squeeze fires, that opens the door for a push towards 518, 520. Now, if they can get that to fire, they might trigger the 2-day squeeze. The 2-day squeeze has room to about 530. Not too shabby. But if they can fire the 2-day squeeze, they might fire the weekly squeeze. The weekly squeeze has room to about 550. So between now and March, that's a move I'm looking for. Trapped in a big weekly squeeze. But man, if they can finally break it above that 500, there's no resistance. At that point, I think you're boogieing towards 550. So for now, I'm going to keep my NVIDIA. I'm going to keep my Google. I'm going to keep my Tesla. And then one name I'm watching like a hawk here is the Microsoft daily squeeze. And for what it's worth, I don't have a trigger to buy it yet. The trigger being a lower time frame buy signal. What I like about it, the reason I'm interested, risk versus reward. If I can get my trigger for an entry anywhere near that daily 21, think of the risk reward. It's really, really solid. Let's say I'm picking it up near 370-ish on a 30-minute or an hourly buy signal. My risk is a break of the daily 50. Microsoft comes down, takes out 367, 366. I'm taking that trade off. So if I can catch it anywhere in this neighborhood, I'm going to take it off down here in exchange for a push towards 385, 390. I like that. Risk maybe, you risk maybe $5 to catch 10, 15, 20. Pretty solid. So what I'm going to do is mark up that daily 50. Right? I'll make it blue. We'll make it blue. And then I need my trigger. So 30-minute time frame. I've got a sell signal. I can't buy Microsoft yet. Hourly time frame. I've got a sell signal. A sell signal in the big three scores a perfect -10 out of -10. The daily chart might look all right. It might be trading at key support. We will never see a daily squeeze fire long when the lower time frames look like that. Just the way the indicator functions, it can't physically happen. Every single time that daily squeeze fires, lower time frames will look the same. You got a daily squeeze, you're coiled up near that 21 EMA, and then boom, right there comes that big push. Every single time, 15-minute, 30-minute, hourly, 2-hour, they're doing the same exact thing. And what they're doing is before and during the big push, they're printing a buy signal. It's really, really simple. So if we look at the hourly chart, there's the hourly. All right, there's your hourly signals. Last time Microsoft fired a daily squeeze to the upside. You had a daily squeeze. You're right on top of that daily 21, right on top of that launching pad. You don't get anything going until the 15-minute, the 30-minute, the hourly, the 2-hour, until everything from the ground up is aligned for a push higher. I can't look at the hourly chart right now and think Microsoft is gearing up for the same move. It doesn't fit that template. If I drop down to a 30-minute time frame, it'd be the same exact thing. Before and during that big push out of that daily squeeze, 30-minute time frame is bullish. If I showed you the 15-minute, same thing, 5-minute, same thing. So there's the template. I want to find a larger time frame squeeze. Could be a monthly, could be a weekly, could be a daily. I want to get it right on top of support, right near that buy zone. But then I need the alignment from the ground up. I've got to wait until I can pop open the hood here. Pop open the hood to Microsoft's daily squeeze. Run it through the X-ray machine. Take a look inside. And everything's lined up. That way you can buy Microsoft. And that afternoon, the following day, the day after that, you're already being pushed into a profit. We could buy it today. Give that trade maybe 30, 50, 60 days till expiration. And we could ride it out. Sit through some pullbacks. Sit through a little bit of back and forth chop. Personally, I don't like tying up cash like that. I've got the patience to sit through the chop. I've got the willingness to sit there and wait for a nice move. But I want to work my timing in a fashion where once I buy those calls, it might be off to the races. You can't do that until you get that multi-time frame alignment. What you want to avoid is a tug of war. And by tug of war, I mean this. All right, so here's Microsoft. All right, there's Microsoft. Too much tug of war. The monthly chart, perfect 10 out of 10. The weekly chart, perfect 10 out of 10. The 15-minute, negative 10 out of 10. The hourly, negative 10 out of 10. Those two things are never going to work. If I want to get short Microsoft, where's the alignment? My 15-minute and the hourly might say get short. My weekly and my monthly say don't get short. Now take NVIDIA instead. 10 out of 10 on the monthly, 8 out of 10 on the weekly, 7 out of 10 on the daily, 7 out of 10 on the 4-hour, 6 out of 10 on the 1-hour. Positive scores from top to bottom. So take that picture, take a mental snapshot of that. When the SPX and the QQQ can do that, in addition to the good-looking monthly and the weekly and the daily, things have cleaned up from the ground up. 15-minute back in action for the bulls, hourly back in action for the bulls. Then I can put more cash to work. So really, NVIDIA and Meta, The only two names on the board right now where every time frame gets a good score. If you're looking to get long, right? QQQ, tug of war. Hourly -6. Amazon hourly -8. Microsoft, Apple. Bigger time frame say buy the dip. Lower time frame say not yet. So regardless of what indicators you use, whatever your buy signal or your sell signal might be, make that a rule for yourself this week. And we'll keep using Google as an example. You might be drooling over that pretty Google weekly squeeze. Just understand, nothing good will come from that weekly squeeze until everything is aligned from a 15-minute all the way up. You jump in and buy it now. The problems on the 1 hour time frame, they might work their way over to the 4 hour. Now you've got bigger problems. The problems on the 4 hour might work their way over to a daily time frame. Now you got some real issues. Find a good looking squeeze across a bigger time frame, then wait for your trigger on a lower time frame. If the trigger prints, good chance you might get the move you're looking for. If the trigger never prints, you never got long, you never added to your position, you're not taking on all that pain. Alrighty? So I'll hang out here for a couple minutes, guys, to do a little bit of Q&A, and then I got to go shovel before the open. Got to get a workout in before the fun starts. And then I'm curious, what do we got for the good old economic calendars week? My favorite things, earnings, economic calendars. I just love it. What do we got today? Consumer credit, nobody cares. Tomorrow we got the trade deficit. I'm not even sure what that is. Wednesday, wholesale inventories. The big to-do will be Thursday and Friday. Thursday, we got jobless claims, CPI, and then Friday, we got the PPI. All the eyes on Thursday and Friday. J. Cameron Carter. Any relation to John F. Carter? Cameron, we're going to push that update hopefully this week. So we haven't pushed that update just yet. But once it's live, you'll get an email. You'll get the heads up, and you can download all the fresh links. Alexa, you got a foot of snow in Boston? Wow. I'm about an hour, maybe an hour 15 from Boston. I think we got 4 or 5, maybe 6. I think the kids had to go to school today, though, which is a real bummer. Matt, am I trading the futures with this setup or not as much? So I haven't done as much futures trading over the last few weeks, but that is a big part of the game plan this year. Where I think I'm going to focus on the futures trading a lot more. Again, like the 80-20 rule. 80% of the time, the market's not doing much. Like it's really not doing anything meaningful. There's no big trend higher. There's no big trend lower. 80% of the time, we're just kind of chopping back and forth. Kind of like right here. Yeah, we're up, we're down, we're up, we're down. We're not really going anywhere. It's that other 20% of the time where you have those big squeezes. Big monthly squeeze, big weekly squeezes. They don't happen too often. When they do happen, I want that to be my major focus. If I'm in a market where the S&Ps have a monthly squeeze, QQQs get a weekly squeeze, Google squeezing, I want to save a lot of my mental and physical cash for those setups. Knowing that's my favorite trade in the world, knowing that's where I've always made my most money, but more importantly, knowing they don't happen every day, every week, or every month. The other 80% of the time, in the absence of a big squeeze and a big market mover, then I think I'm going to shift my focus a little bit more to the futures trading. Wake up, find a 15-minute, 30-minute hourly squeeze, try to hit my daily goal, and then keep it moving. Right now, being that we do have a lot of squeezes, that's been a little bit more of the focus. But the futures trading would be the same exact thinking. So a good example is if I'm looking for a futures trade today, I'm going to start on my daily chart. What am I working with? Well, it's pretty bullish. 7 points out of 10. Good looking trend. Right on top of that launching pad. Right on top of that 21 EMA. I'm not getting a trigger for a push higher on the hourly. It's neutral, right? No green arrow, no buy signals, no action. If I go to the 30-minute, there's no trigger. It's neutral. If I go to a 15-minute, all right, I am getting a little bit of a 15-minute buy signal. But point being, for a futures trade, for a stock trade, it has to fit that template. My time frame of choice might be the daily chart. But if I buy calls today or I sell puts today, what am I looking for? I'm looking for a move just like the one you had back here. I'm looking for the same exact thing. A big rally off that 21 EMA. Same thing every time. 2 hour, 1 hour, 30-minute, 15-minute, before and during that push, they're printing that buy signal. I've got it where I want it. On top of that daily 21, I don't have a trigger. Now imagine by 10 o'clock this morning, the 5-minute has a buy signal, the 15-minute has a buy signal, the 30-minute and the hourly, they're all cranking out a buy signal. Now I've got a trade. Doesn't mean the trade works, but more importantly, it fits that template. And you can take that template, apply it to any time frame. You might be looking for a rally off of the hourly 200. We'll do QQQ. Maybe the QQQ pops a bit today. You're back above the hourly 200. Any level you're looking for a rally off of, there's a template for it. If QQQ is going to rally off of the 200 SMA, the 2-minute time frame, the 5-minute, the 15-minute, the 30-minute, they've got to have that alignment. These rallies don't just magically happen. Whether we're buying a pullback on a weekly chart, a monthly chart, we're buying a dip at a 21 EMA, a 50 SMA, a 200 SMA. You always want to look from the ground up. So it might be the hourly that I'm watching. It might be the 200 SMA that I'm looking for a push off of. I've got to drop it down to a 5-minute, 15-minute, 30-minute. I'm not going to get my rally off of hourly support until my lower time frames are fully aligned. Make it a pretty colors thing. And you might have different indicators, but that should be the same process. Like I told you guys a few weeks ago, I think one of the best things you can do for yourself this year, develop your own scoring system. Build a scoring system for the structure. Build a scoring system for the trend of the chart. Build a scoring system for the momentum of the chart. And then apply that across all the different time frames. Before you buy the QQQ at the hourly 200, check your 5-minute. What does the scoring system say about the 5-minute? Does it grade out in a bearish fashion? You're probably not ready for a bounce just yet. Does it grade out in a really bullish fashion? and you might be ready. And a basic example could be something like this. Structure. Is price above 21 EMA? Is price above the 50 SMA? Is price above the 200 SMA? Okay, so QQQ hourly. How we doing here on the structure score? Is price above the 21 EMA? No. We ain't getting a point for that. Is price above the 50? No. Is price above the 200? No. You're getting no points here. How about the QQQ monthly chart? On the monthly chart, we're getting 3 points. We're above that 21 EMA, 1 point. We're above the 50, 2 points. We're above the 200, we got 3 points. Take it a step further. Is the 21 above the 50? And you could add things, and play around with it, but a basic example, best possible score here would be 4 points. The QQQ monthly chart gets how many points? We're getting a perfect 4. We're above the 21. We're above the 50. We're above the 200. 21 EMA above the 50. Monthly chart grades out as a perfect 4 out of 4. How about the hourly? We're getting no points. Actually, the Bears get the points here. We're under the 200, under the 21, under the 50. 21 is under the 50. There's that tug of war. The monthly chart, perfect 4 out of 4. The hourly chart, negative 4 out of 4. That's not a good example of alignment. The morning you wake up in the monthly chart, 4 out of 4. The weekly chart, 4 out of 4. The daily chart, 4 out of 4. And the hourly, the 30, the 15 minute, they're all 4 out of 4. Now you can take action. Now, in the context of a good-looking monthly, a good-looking weekly, everything's locked and loaded from the ground up. So that is my advice, guys. And actually, I'm going to challenge you. I'll be back with you all on Wednesday morning. My challenge to all of you between now and Wednesday morning, put together your own scoring system. Structure, momentum, trend. Put together a scoring system. And then we're back together on Wednesday morning. You can throw it at me here in the chat. I'll take a look at it. Can maybe give you some advice in terms of things to add. And who knows, maybe I'll take a couple things from your scores and add them to my system. But that is my challenge to you all. Build out those scoring systems. But all right, y'all, I got to hit the road here. I got to get the shoveling. Oh, man, it's 9:20. Okay, so now the question becomes, can I shovel the walkway in 10 minutes? We about to find out. But all right, everyone, thank you for your time as always. Really, really appreciate you kicking off your week with me. I wish you all the best of luck this week. Be patient, be disciplined, be mindful of earnings, be mindful of the economic reports, and I'll talk to y'all later. Adios.